At the tone, please record your message. One for more options.
Alright guys, welcome back to Roxham TV and also welcome back to Gem Crypto. Whichever platform you're watching on, I hope you guys are having a fantastic day. As for Bitcoin, is kind of undecisive right now because we have a nice rally. We are officially inside that 90k zone, so that's a nice round-up number. It's also a nice psychological number. So point being, well, right now is holiday season. Happy Thanksgiving in the US. So having a holiday pump, having a holiday rally, who doesn't want that, right? However, is this a real deal? Is Bitcoin going to stay inside this 90k zone? This is what we're going to find out. So using TA, using chart analysis. But I would say right now is more difficult to predict where Bitcoin is going than ever before because institutional money, like so-called smart monies, are here. And when we look at macro, there are undeniably many macro tailwinds on the come. So is Bitcoin gonna just having a bad few weeks and things are gonna head better? Because I feel like if you are bull, there are many positive factors to believe in. For example, global liquidity unlocking. For example, US governments are being so supportive of crypto all of a sudden, like during the new current administration. So that's just one side of like bullish factor for the bull to believe in. And the second one is on-chain, because like for months, on-chains have been telling us the best time is ahead of us. So what about the bear though? Like what is the bear trying to believe? Like what are the reasons that they are holding on to? Well, first of all, there are TA. So TA looks like, well, what TA is suggesting is a bull trap. So looks like a dead cat bounce. And another reason why the bear tend to believe that, okay, this is a bear market, things are just gonna turns out even worse in the few weeks or even possibly the few months to come. the reason why they hold on to that beliefs is that we have this 4-year halving cycle. Of course, the 4-year halving cycle, the effect is going to diminish for sure because like now that institutions are in and big money are in and whales are getting in, basically institutions are buying out bags for the first time. So us retails actually front run the whales actually front run the institution or even nationwide. However, looking like the 4-year cycle very much is still playing out beautifully according to the chart. So that's just the market analysis where possibly Bitcoin could be heading to. So that's the first segment we're going to dive into in today's show. Well, there's actually so packed with today's agenda. So the second part, we're going to do some news analysis because there happens to be more drama coming from Justin Sun. Like Justin Sun is never out of drama, but like here's is an interesting one because right now he's accusing First Digital Trust of $456 million of misappropriation for that stable coin. So we're going to look into that news, what's going on, is there any interesting story behind? And then third, well, today agenda, we're going to look into AI as well because Google happened to unveil a new TPUs. We're gonna dive into the device, what's so mesmerizing and groundbreaking about this new AI TPU. We're also gonna look into the topic of whether AI is being in a bubble territory, a little bit frothy. So packed with agenda today. So I hope you guys enjoy. Make sure to give us a thumbs up and make sure to stick around for the whole live stream. So without further ado, let's actually hop onto the Bitcoin analysis. Let's actually hop onto the TA first, starting from the daily candle. So from a shorter time frame, and then we're slowly gonna look into the weekly as well. So one thing, like from a TA perspective, like as I mentioned in the beginning of the show, like TA is signaling we are in a bull trap. So that cat bounce. The reason why is because, okay, if we zoom out, we haven't actually broken out of any criticals level yet. So this is the interesting part. One thing I noticed, okay, first of all, the general downtrend, we haven't even hit that critical levels. So if we were to hit, it has to be at least like $95,000 by now. But so far the criticals level, we just like we haven't even hit, so there's no rejection happen. So that's the bearishness I'm seeing. And then the second thing is that, okay, let's go ahead and draw the rectangle. I draw the rectangle. I actually draw the rectangle like 2 weeks ago. I wonder why it just magically disappeared. But anyways, I'll just draw it again. So the box, that rectangle I drew, is this important region I have been watching for weeks. The reason why, okay, the region that I'm saying is between 90K to 92K. The reason why this is so important and we have to watch again and again is because like if we look at the previous, so back in November 2024, it has been acting as support. Support here, so support here, and then yet support here. So prior support is going to be our future resistance. And this region is interesting because like there isn't a lot of trading volume inside in between this price range. So that is being between 90K to 92K. So it's nice to see on the daily candles, we are like Bitcoin is trying to give some trading data and being inside this trading volume once for all. And second thing, okay, well, actually, there are some bullishness that I spotted, and perhaps that is the only bullishness I spotted from this chart. So, actually, let me remove the drawings because it's very annoying to watch. So, in terms of the RSI, we actually have a major breakthrough. So RSI, let me bring this up a little bit. So RSI, we have been kind of bouncing off. So let me bring up the little brush. So we have been like bouncing off and keep getting rejected at this critical level. And then yet only recently, so this happened on 25th of November, so just like 3 days ago, we actually broke out of this downward movement on the RSI. So this is a nice thing to look at least like on the short term. That means in the coming days, it's going to be a deadcat bounce. It looks like we're getting a relief rally once and for all. And this is one good thing. Another good thing I'm seeing is that RSI has kind of gotten low enough because like RSI actually we reached 23 on the RSI. It's like we haven't reached this low for a very long time. Like last time that happened, that was back in August 2023. So the bull likes to say that, okay, we've got low enough on the RSI, that's why we're bouncing up. And just look what happened back in August 2023. And we got the RSI, we got the death cross, and then yet again, like if we actually close the RSI. So if we look back into August 2023, and here we have the death cross, right? So death cross, of course, being the red line going above the blue line. So in other words, 200-day moving average going above the 50-day moving average. That's what classified as a death cross. So what the bull is clinging onto right now is that, okay, last time when we got to the RSI as low as, well, actually it went very low indeed. It broke 20 on the RSI indicator. We have the death cross, but like, look at what happened. Bitcoin kind of like bounced to 75 before we have this like a major consolidation period. So the bull is clinging onto this fact, like we had a death cross back in 2023, and then the RSI got as low as like even went to 20. So that's why same thing gonna happen, but from if we actually look at more data point instead of just one, what makes it different for these like August 2023 is that back in the days, here, we were trading above the 50-week moving average. And one indicator that hasn't failed me so far, like so far the success rate is quite it's quite good, I'll say. So far one metric hasn't failed us, is that if we get 2 consecutive weekly candles close below the 50-week moving average, then that is the definition of the bear market. And if we look at what happened back in 2023, so August 2023, is that we were actually trading above the, so we're actually trading above the 50 weeks. So the left side is the daily candle, the right side is the weekly candle. So if we go back to, okay, the left side, death cross happened in September. So if we zoom to the right side, we were actually above the blue line. So this is the formula of a whether to differentiate a bear market or a bull market. So I would say it's whatever you want to believe. Like there are bullishness I saw, like maybe from macro, or there are bearishness I saw. And so far, TA has been helping me a bit more compared to macro or compared to on-chain. Because like I'm not seeing that on-chain analysis, it doesn't work, but like maybe we have to counter in a little bit more about the diminishing return. And for macro, maybe because it's so macro, it's so long term. We know global liquidity is unlocking, but maybe it takes time to actually reflect on the chart. While TA Like I like how TA is constantly adjusting when we have new data comes in. Like TA for me is like calculating the probability, and I do believe narratives follow price for some reason. I don't know why. Like I have talked about this dead cat bounce. Like we have got to as low as like 80K, and when that happened, I actually warned my community. So I talk about that on Roxham TV for 2 weeks. Like, looks like we are in this like dead cat bounce. We're gonna get a relief rally. It's not a staircase to hell, because it doesn't work that way. And so far, TA has been working pretty well for me. I will always draw TA, like using an analogy with poker, because like I'm not sure if you guys play poker, but like when you get a new card every single time, you're calculating the probability every single time. So that's how TA work. It's not a crystal ball. Of course, you can't predict the future, but like it's constantly adjusting, like with new data, and narratives always do follow price. And looks like the reason why we have this relief rally after all, so when we hit the bottom, like a local bottom of 80K, and we have this relief rally, is because the Fed, like they chicken out. We thought we're not going to get a 25 basis point cut, but end up, well, it hasn't happened yet, so we're going to get the result on 10th of December. But based on all the Fed watch, based on poly market, the chances are significantly higher. Like 80% of public gonna expect a 25 basis point cut after all. So maybe that will play out. So anyways, like zooming out, I want to draw ties, and I'm seeing a very similarities right now, because like looks like everything just works in a cycle after all. We have this like chart, so new paradigm, basically that kind of aligned to the all-time high we've got, so 126K. So that's the new paradigm. People are saying that we're not going to see any volatility anymore now that institutions are in, now that Wall Streets are in, and now that is in pension fund or 401k, yada, yada, yada. So that's the idea. But when it comes to the execution, like looks like even from the all-time high of 126K, so here back in 6th of October, like from the 126K down to 80K, that is still a 36% correction in a matter of 45 days, not even 2 months, so 1.5 months. I like to take a piss out of those like people claim about how volatility is just not going to exist in Bitcoin anymore now that Bitcoin is getting so big and so mature. Because the fact is, we got a 36% correction within just like 2 months, less than 2 months. And point being, like if we zoom out, it looks terribly similar to the chart here. Like here, when we reach all-time high, people are saying, okay, it's so bullish, it's up only, Bitcoin is getting and becoming a macro asset because Wall Streets are here. And then we have the dip. And a lot of people were in the denial phase. That's what I saw, especially with a lot of bull out there, a lot of YouTubers out there still saying that it's not a bear. While we have the confirmation of 2 weekly candles close below the 50-week moving average. But yeah, if you believe in TA, that's what it differs from macro, I guess. So I'm seeing the denial phase when we reach all-time high here, and then uh, we dump to 80K. And right now we're having this relief rally, so this little pump. So it kind of looks similar to, if we go back to the chart, like to the bull trap right here. Okay, things are going to return to normal, so-called return to normal. So that's one thing I spot. And another thing that I was actually watching some YouTube videos, from some other influencers out there. And wow, he was still calling Well, he wasn't calling for alt season. I'll give him that. But his plan was to buy more altcoins right now, and especially right now till first week of December. And then mid-December, he's gonna exit all the altcoins position. So there's a really big YouTubers. I'm not gonna drop any names, but like it feels like, because like right now he's just betting on that narrative. And by the way, he has been calling for an alt season for months, and we know that that didn't happen, and yet he was like really into altcoins. I don't know if he got anything to gain from it, but it is what it is. But like his thinking is basically when a bear market happens, it usually start with Bitcoin and then Ethereum and then altcoins, because that's what happened in the previous cycle back in 2021. Like Bitcoin topped first, and then Ethereum at a later stage, and then altcoins finally topped in early 2022. So it's kind of betting on that narrative. But like for myself, it looks like we're just picking up pennies in front of a train. So for the risk and reward, it doesn't really make sense for me. And yeah, I just kind of want that out. And the reason why I'm so bearish on altcoins, like take a look at this. We are looking at Toto 3. So that being the crypto total market cap, excluding BTC and ETH. And we kind of topped here. That was 7th of October, of course, the same time when we topped for Bitcoin. And ever since, it's a down only. And looking like there are more room for altcoins to correct. And a major critical support that I'm watching is actually 750, 58, or actually 760 billion, somewhere around this level. This is a critical level I'm watching. Like maybe we're gonna bounce off when we drop lower, but it looks like it doesn't take a genius to work out that this is a downtrend for altcoins. And in a bear market, we know Bitcoin going to suck up liquidity from altcoins instead of liquidity going to altcoins, because it just doesn't make sense. And yeah, let's actually jump onto the weekly, slowly building up that time frame. On the weekly, as always, like not much has changed. Like we dropped below the 50-week moving average. On the weekly, it's actually quite 1, 2, 3, 4. So 4 consecutive weekly candles of going down. It makes sense we have this relief rally, right? Like if you think about it, from 126K down 35%, that means the probability of us going down and then sideways, some consolidation on perhaps even try to reach 50-week moving average and get rejected, that probability is pretty high. So yeah, I mean, I just like to say what I see in the charts. I know it's not a popular opinions, especially compared to a lot of YouTubers that out there, but I just like to put out the fact. And again, TA is about calculating probability. It's like poker. And right now, the probability leans towards the bear instead of the bull. Like, I'm not being a perma bear here, but if we, okay, first of all, on the daily, we have to get out of this general downtrend and break above and close above, having a daily candles closing above, not just wicking above, because wicking above, that means we get rejected at this critical level. So I'm going to remain my bearishness. Like first, we need to break out of this downtrend. And then I won't be surprised, even we try to reach the 200-day moving average. So 200-day is sitting at 109. But I do expect this going to correct down a little bit, and maybe Bitcoin will reach 108K, something like that, because 108K is a level I'm watching very, very closely as well. But technically speaking, any level below 108K is just a bear market, and especially we have the confirmation from the weekly candle as well. So yeah, not a lot of bullishness I'm seeing apart from the RSI, and looks like the RSI is telling us this is a relief rally again. So in terms of the DXY is looking strong because like we're on the weekly and we are building up this upward support for quite a while. Maybe we're going to find some resistance at $100. If so, it's going to be a positive side for so-called risk on asset like BTC, like S&P 500, because DXY and BTC, they tend to have a negative correlation of around negative 0.7 correlation. So when DXY goes up, BTC tends to goes down instead. So if this continue an uptrend, this is not a good news for risk on asset. However, jumping to the SPX, so S&P 500 is looking quite strong. Like we know that, okay, we are on the weekly chart. So we know that we are forming this general downtrend. This is not a bullishness, like we need to see Bitcoin actually getting above and close above this downtrend. However, today is Friday, so that means this weekly candle going to be closed in 2 days. So looking, like judging from this candle alone, this weekly candle alone, it looks like is a pretty strong candle. So just like here, so if you guys curious to know more about how to read the pattern, here you go. So even for a candle alone, there are different ways to read it as well. So this weekly candle, if we zoom closer, is looking pretty strong. So after 1, 2, 3, 4, so 4 consecutive weeks of going down, this weekly candle has strength, has momentum in it. So let's see how this plays out, because like it looks awfully like here this chart, so buyers in full control. Maybe the S&P gonna break this downtrend and close above it, but we'll see, because we will have the closing soon. Today's Friday. We're gonna close that on Sunday, and we're gonna read that again on Monday. All right, so that's for TA. What we're gonna do right now is actually take a little break, because like the next agenda, we're gonna look at Justin Sun. He is again brings so much drama to the market as always. So do stick around after all these number. Like let's take a little break, because like that's a lot of data to process. So I promise you guys we're gonna dive into the news analysis in a bit. So see you guys in about 3 minutes.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
月2號邊個呢個啊？ All right, guys. Looks like I was live a little bit, but anyways, we're gonna dive into Justin Sun's drama because that guy is never out of drama. So, basically, what happened is actually let me open the news. So, a stable coin promised $1 to $1 backing, but almost $500 million of its reserve didn't stay in the bank. They were moved overseas into shady investments. Dubai court stepped in, and now Justin Sun and Fast Digital Trust are in a global fight over who is responsible. So, why TUSD became shady? So, let's actually do a quick recap. How did we get from here? So this is actually, it has been boiling for months. This news we are looking at April 2025. So Justin Sun has been talking about this and accusing Fast Digital Trust for quite a while. So point being, TUSD, the biggest problem was quite simple. Money that was supposed to back that stablecoin, so $456 million, wasn't kept in safe liquid places. Instead, where did it go? It was moved into a Cayman Islands fund, then sent to a Dubai company, then used for risky investments like mining or shipping or ports, which made the money very hard to get back. This broke the basic promise of a stablecoin being stable and pegged to the dollar at a 1-to-1 basis. When users tried to cash out, the money wasn't there in liquid form. So how do we know? Because like Dubai actually stepped in, and they actually stepped in, well, back in 13th of November, so 2 weeks ago. So Dubai stepped in and actually froze $456 million worldwide, confirming that something serious went wrong. This is the core of the TUSD scandal. But how did Justin Sun get involved? So how did he, like, why is he in this case, right? So turns out the key connection here is that Justin Sun wasn't the one who moved the funds, but he became involved because TUSD needed a bailout. When TUSD's reserve went missing, redemption pressure started. So Justin Sun, who's linked to TUSD through TechTerex and Tron, he stepped in. Justin Sun actually invested. So he invested $456 million of his own funds. This was to cover the missing reserves and protect TUSD holders. That's why TUSD did not collapse. It's not this one. So TUSD did not collapse on the spot, but this also means Justin Sun personally has a huge interest in finding out where that money really went and getting it back. This sets the stage for the fight with Fast Digital Trust. So the current fight right now, like Justin Sun versus Fast Digital Trust, after the bailout, Justin Sun began accusing Fast Digital Trust, which is a Hong Kong company that handled TUSD's reserves, of being involved in the missing funds. So what Justin Sun is claiming here is that FDT, being the trust, so Fast Digital Trust, mishandled TUSD reserves. Funds were moved without proper approval. Money ended up in some risky Dubai investments, and FDT used Hong Kong trust loopholes to avoid straight oversize. He is even calling this is exactly the FTX, like a crypto FTX, abusing user money behind the scenes. FDT, so this Fast Digital Trust, of course, he denies everything, and he says Justin Sun is attacking them just to hurt FDUSD, so being the stablecoin, the competing stablecoin. But here came the twist, because Dubai stepped in. A Dubai court issued a global freeze on the same $456 million linked to TUSD's missing reserves. What Dubai did actually is supporting Justin Sun's claim that the funds were moved or misused or hidden overseas. This, of course, doesn't automatically prove Justin Sun is 100% correct, and especially given his infamous reputation, I don't actually trust a word coming out of his mouth, but it shows there is real evidence of shadiness behind and around TUSD reserves. So the legal system is now treating this as a major crypto crime or major financial crime. This does give some credibility to Justin Sun, even though he has a very controversial past. So why the fight is so intense? Like, he is actually raising more drama, double downs on Fast Digital Trust, the fraud allegations, and he's urging the Hong Kong regulators to actually do something. So what he wants is, of course, he wants his $456 million back. He claimed that he wants to protect TUSD's users. He wants to weaken FDUSD because it makes sense. That's the competitor of TUSD, right? And for the other side, for Fast Digital Trust, they want to protect their business reputation. They want to defend their own stablecoin, and they want to avoid being blamed for the world's biggest stablecoin reserve scandal. This is why the fight has escalated and turned out to be like in the spotlight of public's eyes right now. So why Hong Kong is involved or Dubai is involved? Fast Digital Trust was registered in Hong Kong as a trust company. They are not fully regulated like a crypto custodian. Justin Sun says this loophole led FDT move funds without strong oversight. So this scandal is putting pressure on Hong Kong to tighten rules fast. As for Dubai, this is where the diverted money ended up. Like Dubai froze the funds worldwide. Dubai may now lead the asset recovery process. So in simple terms, Hong Kong is where the mistake began. Dubai is where the money landed. So the freeze from Dubai right here is the biggest piece of proof so far that something was seriously wrong with how TUSD reserves were handled. This battle isn't just drama. It could reshape how stablecoins are regulated in both Hong Kong and Dubai or around the world. So once I get more updates, especially on the Hong Kong side, of course, the first platform I'm going to break is on Roxham TV. Now, moving on to some AI news because today is full of agenda, so please bear with us. So let's take a look at Google because Google dropped its latest and newest AI chip, the Ironwood. So wait, do I have it here? So Ironwood. So Ironwood, the TPU. It is a big upgrade, around 4 times faster than the older TPUs, combined with Google's huge advantage in search data and YouTube videos. This finally puts them in a real position to challenge even NVIDIA. And together with this new Gemini 3 model, Google is making its strongest push in years to take back the AI lead. Google hit a record of $100 billion in cloud revenue just this quarter, driven by AI workloads from companies like Meta or Anthropic. But the rivalry with NVIDIA is heating up. Google is pitching its TPUs as cheaper and more efficient, while NVIDIA maintains a full generation lead in GPUs. But this actually raises a broader question. Are we in an AI bubble? We are seeing thought on the internet saying that there might be a potential that these tech companies overorder these TPUs or now perhaps GPUs and TPUs. So what we're going to do, we're going to look at the argument on both sides and dive deep into the analysis. Let's start with Google because Google is making a huge comeback with the TPUs that they design and with Gemini as well, so Gemini 3. So Gemini 3 actually launched, I think, 2 weeks ago, maybe a week ago, I can't remember, but it's quite recent. Google's latest flagship model, what they bring is stronger multimodal reasoning. So from images or from videos, from audio, like Gemini 3 is really, really good at processing images and videos. So far, it's the best. And Gemini 3 has a much lower hallucination rate and deeper integrated into Google search. So if you go to Google search right now, you're actually secretly using Gemini 3 behind the scenes. And because Google, they have this vertical integration, they can use YouTube, they can use the search data. So YouTube actually enhance the training data for superior video understanding. So that's why Gemini 3 is so good. And the feedback that we got is so positive. So consider Google's big comeback moment with Gemini 3. There are major cloud deals that are being done with Anthropic. So it pushed Alphabet past $100 billion in quarterly cloud revenue. And Wall Street reacted very positively with multi-day stock gains. So if we take a look at Google, so here we are looking at the past month performance. This is a really generous, good-looking chart. So from $268, this is just 1 month ago. Right now, we are sitting at $320. So that's a nice 90% gain from the past month. Now, I kind of want to compare with NVIDIA. So NVIDIA for the past month, same period, is actually down 10%. So from $200 right now is sitting at $180. So that's why we are drawing the comparison between the two. And let's actually look at this TPU. So this ironwood. So this TPU, basically, this latest Google's TPU. What do we know, and why is it so good? So ironwood is Google's 7th gen TPU, purpose-built for the age of inference. So the key thing we need to know about this TPU is that it's up to 10 times better its peak performance compared to TPU version 5, and it's 4 times better in terms of training and inference efficiency, and it's deeply integrated with Google Cloud's new Axiom-based AI servers. So that's what makes it so important. Is optimized for scaling massive models like Gemini 3. It's being pitched to hyperscalers like Meta, like Anthropic. It positions Google as a cost-effective alternative to NVIDIA's GPUs. So who's winning here? We are seeing the stock price of NVIDIA not doing so good. So Google versus NVIDIA, who's winning? For Google, they push TPUs, including this like latest update, Ironwood, as cheaper, more energy efficient alternative, and it strengthened the vertical integration. So from chips to models to Google Cloud, and since it's so vertical, it controls all the data from YouTube, from search, Google search. So that is the advantage that NVIDIA doesn't have. While for NVIDIA actually still owns 90% of AI hardware market, and GPUs remain a generation ahead in raw compute. There's a huge revenue growth, like even the latest quarter earning, it beats expectation. And there's also a deep lock-in for its customers with the software CUDA and lock in basically all the developers. So it's not so easily to replace NVIDIA, in other words. So the bottom line is Google isn't eating NVIDIA's lunch, but is applying pricing pressure, which could matter long term. Analysts see this as a, well, maybe both these two companies would exist at the same time, so it's not exactly a displacement. So one thing leads to another. The really hot narrative right now people are discussing is whether AI is in a bubble, and there are legit reasons to believe either way. Why people say that AI is in a bubble? So, for example, hyperscalers spending like hundreds of billions of dollars on AI hardware in 2025, and there is a power shortage issue, leaving some of that GPUs idle, like because Microsoft has reportedly holding some unplugged GPU in the inventory, and Michael Barry are shorting all these like AI narratives. He is pulling a heavy short on Nvidia and Palantir. So that is some warning, because we know Michael Barry, why is he so famous, is because he pulled a massive short position back in the housing bubble in 2008, and he made a lot of money. So that's why he's so famous. So when Michael Barry, like a veteran, pull a short, maybe there's something behind the scene. Maybe we're getting too frothy. We are in an AI bubble, much similar to the dot-com bubble. Basically, too much spending, too little revenue. But if we look at the other side of the argument, like why people happen to think this is not an AI bubble, we're not getting into the frothy region anytime soon. So if we look at the comparison, okay, for AI, the real world adoption is about 70 to 80% of companies that are using AI in this right now, day and age. And CapEx is cash funded instead of debt funded like the dot-com bubble. And several compute shortages, and actually the demand still exceeds the supply. And if you cross-check that with the US government, so US government actually, so we have this US government stance. It doesn't make sense that AI sector is falling anytime soon. So if we look at the GDP of US, take a look at this. AI-related investments have become the primary driver of US economic expansion in 2025, accounting for nearly half to over 90% of all US GDP growth, depending on the specific metrics and time periods you're looking at. So US, as we know, they're not exporting anymore, so they don't have actual physical goods. They're not exporting to other countries, so they need the tech to work. Their entire portfolio is betting for AI to succeed. And another confirmation I've got is the White House. So if we hop onto Twitter, this is the official Twitter from the White House, and they tweeted this out on 26th of November. So here's what they said. The Genesis mission is wiring together the world's most powerful supercomputers, cutting-edge AI, and exclusive datasets across every major scientific field to double American research speed and impact in just 10 years. So this is basically the US government cannot afford the AI bubble to pop. So they are constantly pulling billions of dollars, and that's why we are seeing even the officials on Twitter are shilling AI hard. So just to conclude the news that we've got, Google's Gemini 3, the whole Ironwood launch marks the whole launch. It marks the company's most serious challenge to NVIDIA since 2017. Google is not overtaking NVIDIA yet, but it's finally competitive again in a way investors care about. The real wild card is whether this massive AI investment cycle becomes a transformative industrial revolution or a historic overbuild with power shortages and idle silicon. Early signs point toward continued growth, but risks are real. AI is a GDP engine and a stock market catalyst and a geopolitical asset, meaning the stakes have never been high before. So let's see how this plays out. Bubble or not, we could only know this in hindsight. So, all right, that's a wrap on our deep dive into today's three big stories. So we cover the Bitcoin's TA, we cover the Justin Sun drama, and whether we are seeing early signs of an AI bubble. We're going to take a short break, and when we come back, we will shift into DAT. So that's being digital asset treasury companies, which has been looking pretty bearish lately, not gonna lie. For the next segment, I've invited someone who lives and breathes this space. So who is the COO of Moon Inc., to break down the latest narratives and share his expert view on where things are heading. So stay with me because we've got even bigger valuable insights coming right up next.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go!
in a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Remote. Yeah, I think he's sitting in Argentina.
Huh.
welcome back to Roxham TV. As I promised, we're gonna have a special guest today. Joining us today is Ross Jacobson, who's the COO, Chief Operating Officer of Moon Inc., a Hong Kong-based telecom and Bitcoin infrastructure company that's quickly becoming one of the region's standout innovators. So Ross brings extensive experience from global finance and digital assets, and he now leads Moon Inc.'s push to merge prepaid telecom services with Bitcoin native products. Under his leadership, the company has raised new capital, expanded its distribution footprint across Asia, launched prepaid Bitcoin cards, and secure a listing on the US OTCQX market. So, Ross, thanks for being here. It's great to have you. How are you feeling today?
Thanks. Grateful for being here. It's been a few times I've heard of Roxham, and I know that you guys are sort of expanding your footprint as well. So it's a good chance to connect.
It's great to have you. Since this is your first time in the Hong Kong office, maybe perhaps we could walk us through your background in finance and Bitcoin. Basically, what brought you to Moon Inc. as the COO?
Sure. So I have actually been in Hong Kong for about 20 years. I was in China for about 4 years before that. So I'm very much at home here. I'm originally from the States, from California, but left pretty shortly after finishing college. And I was in traditional finance here in Hong Kong for nearly 2 decades, working for Deutsche Bank. I did work in New York for some time for Deutsche Bank as well, but ended up coming back to Hong Kong where I really consider it my home, my family's home. And eventually made my way to HSBC. So I left HSBC just earlier this year, and there's a lot more background in terms of Bitcoin for me. I've been a Bitcoiner for about 10 years, and so this is something that I've been quite passionate about, sort of as a side hobby, while I was working in traditional finance.
So I wonder, how did your experience in TradFi prepare you for working in the intersection for telecom and cryptocurrency? Because it might be quite different. So what is the experience that you gained during
Yeah,
the journey?
yeah, great question. Um, Well, I mean, I think being in Hong Kong first and foremost is a pretty key feature of kind of my experience here, and being able to add real value to a smaller company. I do speak Chinese, and I've spent a lot of time in China and sort of building cross-border businesses. I also do have experience building smaller businesses. I helped set up a brokerage here in Hong Kong, built out all the operations and the trading function of that business. So, I think in terms of, coming from TradFi, how it really applies to really any company is just is ultimately the network that we have here in Hong Kong. That could be across investment and investors, but also just kind of looking at market structure and relationships with the regulators as well. So in my previous role at HSBC, I was one of the main people interfacing with the Hong Kong Exchange, as well as SFC. So these are kind of a lot of different things that I think I bring to the table for working at a smaller company. And Moon is very much in a stage where, it's very much a build. So as a bit of background, the original company is about 30 years old. So this is not a new company. Was originally named HK Asia, and it was in, as you mentioned, in the telecom space, selling prepaid cards, SIM cards, top-up vouchers, things like that. And that business is still running. We're still running that business, in the background while we sort of build in the new Bitcoin treasury strategy and Bitcoin product strategy. So we're about a 56-person company. The large, bulk of that headcount still sits with the old telecoms business. But we've really been focused on building out the new parts of the business, which are very Bitcoin centric. And, we can talk a little bit more about the details of that strategy.
Yeah, so you touch upon the prepaid side, so the SIM card, and also for Moon Inc. to really tap into Bitcoin. So I wonder, why the decision, like a huge jump from a SIM card business to a Bitcoin into its operations?
Right. So as I think maybe to share some earlier background into sort of how this all evolved. And you may be aware that we have some really key investors in Moon Inc. Going back to, let's say, the last year, and where we really saw this sort of evolution of MicroStrategy/strategy in the U.S. And then later here in Japan, we had Metaplanet kind of get liftoff, over the course of the last year or so. There were some really key investors in making those decisions. And so one of the investors is a US-based hedge fund called UTXO. UTXO was spun out many years ago from BTC Inc. Most people know BTC Inc. for Bitcoin Magazine, the global conferences. So UTXO has a lot of specialization, really in making strategic investments in the Bitcoin space. They had partnered with a gentleman named Jason Fong, who runs an Asia-based VC firm called Sora Ventures. Sora is actually based in Taipei. Jason himself was working onshore for many years for a VC in the Web3 space called Fengbusher Capital. And so Jason and Sora Ventures and UTXO basically got together and created the Metaplanet story along with Simon Jarovich. So as I think most would know, UTXO basically installed Dylan LeClaire to work with Simon to build out this strategy. But the backers were really UTXO, Sora Ventures, and a handful of other investors. And so once they had success with that, I think the seed was planted. And for them, they thought, why don't we do this in multiple markets? And the most obvious market, I think, especially here in Asia, is Hong Kong. Just given that we are very much the gateway to China, and ultimately China is the ultimate market, ex-US, and actually has even more retail investors than the US. So if you look at the hard numbers in China, you have 380 million retail accounts. That's larger than the U.S. population. So it is a massive, massive market that obviously these investors wanted to tap into. And so the genesis of Moon Inc. was really partnering with another local Hong Kong firm as a third part of the structure, and looking for a company that was really fitting to roll out this Bitcoin treasury strategy. And so after looking at multiple companies, we concluded that the HK Asia company that we acquired majority stake in was the ideal sort of candidate, because it's got a very well-established, strong cash flow generating operating business. And we could then start adding on, potential products and really building out the Bitcoin strategy on top of that.
That's really interesting because, like, Moon Inc. is a Hong Kong company, and yourself, you consider Hong Kong as home. So you are the perfect person to speak to and ask about the general Bitcoin scene in the market right now. So, like, Hong Kong is trying to position as the crypto hub. We know that we kind of lost that battle a few years ago compared to Singapore, and Singapore has been like quite advanced compared to Hong Kong. We're only starting to get into the gear since like 2022 or 2023. So what's the edge you think Hong Kong has over other so-called crypto hubs around the world, maybe Singapore or Dubai? What's your take?
Yeah. Yeah, I mean, Hong Kong is really sort of the, original breeding ground for a lot of what we have today in crypto. Tether started here, BitMEX. You had a number of, other exchanges that were here sort of post Mt. Gox in Japan. FTX started here. And so there has always been, a very long history of sort of innovation within the digital asset space, and players and talents here, and both the sort of programming and technological side of things. So I think Hong Kong has always maintained that, despite sort of regulations kind of, going back and forth over the last decade or so. I think you're right. Singapore really did pick up the slack when Hong Kong started to put the brakes on things. And I mean, the obvious history is that China put the brakes on things, and that left Hong Kong kind of in an interesting position where they needed to determine what was, Beijing's view on crypto in general. And I think, ultimately, as you had a lot of the original businesses that were sitting on mainland China, onshore in mainland China, for example, the mining businesses, as well as the exchanges, you had a huge, huge number of wealthy, digital asset holders. And as they gradually got pushed out of China, they made their way into Hong Kong and they made their way into Singapore. And I think some made their way to Dubai over time. So that's still here, right? And I think as we've seen Singapore, I think maybe pump the brakes a little bit as a result of kind of the FTX, situation, and of course Temasek was a large investor there, and then you had Three Arrows Capital and a few other players there that I think they've had to pause and really think about how they want to approach the space. It is really a chance for Hong Kong to kind of take the mantle or take the baton back, and we're seeing that, right? I think we've had a number of really amazing developments here, I guess, across the sort of crypto space in general, from stablecoin legislation to obviously, VASP licenses being handed out to multiple exchanges and other operators here. And I think we're going to see a lot more. There's a lot of discussion around a custodial license being potentially even before the end of the year, but most likely 1Q, also being instituted and being handed out to some of the bigger custodial players here. So in a nutshell, I think Hong Kong really does have a huge opportunity to take that, that crown back, and really just compete directly with Dubai, which has obviously built up a significant amount of infrastructure as well.
Yes, I'll be more than happy if Hong Kong can take the crown back from, I don't know, like Singapore or even from Dubai as well. I'll be extremely happy. So,
Great.
speaking of the Hong Kong regulations, because we know Moon Inc. is getting into the whole Bitcoin DAT narrative. So DAT being digital asset treasury companies. So how do Hong Kong regulations affect the whole Bitcoin products or the long-term plans moving forward for Moon Inc.?
Yeah, so I mean, Hong Kong is it's an interesting market to operate in. I think again, the backdrop of the last few years has been quite conservative, and I think we're only in the last year or so starting to see real progress being made towards, let's say, deregulating the space or maybe putting in more clear regulations so that people can operate, a little bit more confidently in the marketplace. So if we look at the listed company approach, we're obviously regulated by the SFC and we are regulated by the Hong Kong Exchange. And so, as a listed company, we need to work very closely with the Hong Kong Stock Exchange. And a lot of that is actually education because, there is a lack of understanding across all the regulators and the exchange in terms of digital assets in general. And I think there's also a reticence or almost like a hesitation, or almost like a little bit of a fear just because of the last few years and FTX and all these things have put the fear in people. And I think we're just sort of slowly getting people past that. So as a listed company, we're regularly engaged with Hong Kong Exchange. And we are also regularly engaged with the SFC because, they are really the ones working with the FSTB in terms of generating new legislation and making things easier for operators in the city. And so, we have regular discourse with both of those. It is not the, I would say isn't the easiest marketplace to operate in if you compare it to the United States, which is basically just green lighted everything, right? Or you compare it to even Japan. Japan market, for example, you have what you'd call a disclosure-based system. So You can go out and raise funds. You can use those funds for certain things, and as long as you disclose within your reporting time frame, the exchange or the regulators likely not coming to knock on your door. Here, it's more of an approval-based system, and this is true throughout most of Asia. So you first need to approach your regulator, approach your exchange to get approval. So if you want to do a fundraise, you first have to present to them the purpose of the raise, the use of the proceeds, and then you can sort of get their approval before you can proceed. So different approach, definitely a more conservative approach, but one that, those of us that have been in Hong Kong for a long time, we're used to operating in that environment. It actually, in many ways, I think, does create a scenario where, as a company, you do need to think clearly about your path forward. You could see, for example, in what's happened with DATs and also the Bitcoin Treasury Company plays over the course of the last, say, 6 months to 9 months. Some companies have been able to raise a significant amount of Bitcoin very, very quickly. But that may come with a price. I mean, ultimately, if you're trading below your MNAV, you're trading in distressed situation. We've seen this with a small handful of companies, one that's listed in the US, for example, that has decided to sell their Bitcoin and actually pay down some of their debt. And maybe we'll see more of that, where companies sell their Bitcoin stack down to for example, buy back shares. We don't want to be in that situation. I think most DATs or Bitcoin treasury companies don't want to be in that situation. Our idea is to stack the most pristine asset on the planet and never sell it, right? So we are slower than I think you'd see with some of the US companies and maybe the Japanese companies because of this sort of differential in format. But I don't think that's necessarily a bad thing.
Yes, I mean, you mentioned DAT, and undeniably, right now, DAT, we hit an ultra low in terms of the sentiment, in terms of the narratives right now. So, in other words, people are really bearish on the whole DAT narratives right now, because one thing about stat companies is that they are basically Bitcoin on steroids. So leverage up that Bitcoin. So if Bitcoin pumps, that has a bigger effect. The stock price of that DAT gonna rise even further compared to Bitcoin price. But vice versa, like the same thing gonna apply when Bitcoin plummets. So there's like a bigger down risk for these DAT company. For example, MSTR has kind of been struggling lately. So I wonder, how do you manage the risk and volatility in Moon Inc. and especially in those Bitcoin holdings?
Yeah, I mean, every company will be different. So there are obviously different instruments you can use. There are different ways of acquiring and accumulating Bitcoin. And there are very heavily levered formats or, loan type formats, and convertible debt. Pref shares are, something that's kind of made a big splash on the scene this year. And ultimately, they all have sort of different leverage, risks and ratios. You also have companies that, for example, already have a large treasury that they can just apply to Bitcoin. So you're effectively transferring, for example, a portfolio of bonds or stocks or other types of assets, and you're just converting those into Bitcoin, so non-levered. We're in that position where we've raised very little money actually, and that what we have raised is non-yielding type borrowing. In terms of how you manage risk, and this will unfold, right? If we continue in sort of a sideways to bearish, situation, I think particularly in the U.S., there are a large number of companies that have, raised money under different formats that they may come under some duress, and so we will see this play out potentially, unless we have a nice Bitcoin liftoff and we're, into 2026 with a bull market. But I think that, again, because a lot of the Asia-based companies have to take a more slow and methodical approach to accumulating the Bitcoin, and they have different types of tools at their disposal in terms of raising. uh, they probably are under less stress than some of the other global companies that are doing the same strategies. And, if I look at, for example, the portfolio investments that UTXO and Sora Ventures have made throughout Asia, and we have sister companies, one in Korea called BitPlanet and one in Thailand called Deviate. We are all sort of interconnected. We're effectively a portfolio of companies that can cooperate and collaborate. All of these companies are still up significantly from announcement date of their Bitcoin treasury strategy. So we have, our stock price, BitPlanet stock price, and Deviate stock price have still been a fantastic investment for investors that sort of got in early. So I think, it is an interesting time. I don't think anyone saw this coming. I think there was probably a little bit too much hype in the earlier days around Bitcoin treasury companies. And, even, the flagship strategy is under, very consistent pressure over the last week or two. So it's an interesting time. It's an inflection point. And, we talk to people and talk to investors about it. I think in a lot of ways, this is still just the first inning of Bitcoin treasury companies. And, I don't really want to talk about DATs because I think they have a completely different risk profile. Personally, I wouldn't invest in non-Bitcoin DATs. But I think for the Bitcoin treasury companies, those of us that are buying Bitcoin, we're buying Bitcoin for the same reasons as an individual buys Bitcoin. You plan to ride out any bear markets and accumulate as much as you can during the bear, because you believe in this asset. You believe that in the long term, performance of this asset. So I honestly, I think that personally that we're going to have a much better setting in general for Bitcoin itself going into the next few quarters. That's my personal view, and I think that will help put a floor into what we're seeing in the Bitcoin treasury space.
Yeah, I'm very curious on your whole Bitcoin trend because, like, you talk about the Bitcoin's price a little bit. Like, obviously, we are going through a major correction. So, I kind of want to ask this, like, pick your brain on whether Bitcoin's have we entered a bear market? Like, do you think 2026 is going to be basically completely following the 4-year cycle? What's the take from a Moon Inc., so from a listed company?
My personal take, um, I probably fall into the camp of, the 4-year cycle will still have some consistency to it. I think that there's an element of, um, this is quite ingrained and embedded, in particular with long-term Bitcoin holders and whale type holders. And so they're not going to very quickly flip from, hey, this 4-year cycle's worked for me for the last, 10 years or 12 years or however long they've been invested. So I think that you do have some sort of persistence in the cycle itself. However, a lot of things are changing, right? So, we're in a bear market. Is if you just calculate the percent downturn from the highs, I think we're 32% or whatever down from highs right now. That's formally a bear market, but are we going to see a 70% drawdown? My take on that type of drawdown is that in order to see that level of drawdown, you first of all need a significant blow off top. And I think we all watch a lot of the same cycle indicators, and none of them have flashed red. None of the major cycle indicators have flashed red, which would tell you that we really haven't had any kind of blow off top. This has been a very gradual bull market, really from the start of the ETFs and then through sort of the Trump administration election. And it's been a nice steady grind higher really for the last year plus. So do you potentially see major drawdowns in a scenario like that? I don't think so. So my personal take is that, you will still see this highly volatile asset continue to be highly volatile. And, we may see moves that are 30%, 40%, maybe even 50%, both directions, in short periods of time. I do personally feel that we're going to have a much better couple of quarters ahead. We'll see how it plays out. I'm on tape here saying that, but there are some major differences, I think, to this particular phase of the cycle, and the obvious one is Bitcoin treasury companies and the U.S. Government's pivot. And so here you have institutions who are finally here. And I know there's a lot of, like, let's say, this sort of cypherpunk, Bitcoiners and the hardcore OGs and people who don't really like the soup coiners and like what's happening in the sort of institutionalization of Bitcoin. But it was inevitable, right? When you have something that is truly hard money, a truly scarce asset, weak money or weak assets want to flow into that asset. So it was inevitable that institutions were going to come into the space. And I think that actually puts a very interesting floor into it because, and I'm not talking about the ETFs because those are basically just a vehicle for retail and insto flow. But really, when you look at Bitcoin treasury companies as a great example, have hoovered up over 1 million of the 21 million coins already. The huge majority of those holders, and Strategy is by far the largest, don't plan to sell. So, you have a very different type of investor that's entered the market. Unlike what we've really had in the previous cycles, which has just been retail fervor, and retail very typically will create these blow-off top scenarios and then create these massive drawdowns that we've seen in the last few cycles. So we have a new player in the game. I think governments are next, and that's yet another very deep bid that when it comes into the market, it's for size. And it's also extremely sticky because they don't turn around and sell their assets, So I think that we're getting set up for a pretty healthy looking couple of quarters. We are obviously looking, I think it's 80% chance that the Fed's going to start cutting again, starting in December. We're a week out from that. That acts as a catalyst. The US government shutdown probably put a liquidity strain on, you can see that in the swap accounts. And I think generally you're going to see liquidity start to get pumped into the marketplace, and that is always positive Bitcoin.
Yeah, that does sounds really promising, very positive. Well, I cannot ignore the fact that there's a lot of macro tailwinds, like as you mentioned, like rate cuts are coming, global liquidity is unlocking. So, like from a macro standpoint, it's very difficult to be bearish. So, like this is also very positive for DAT, or like more specifically Bitcoin treasury companies. You kind of mentioned the partnerships with the Sorrow Ventures and DV8. I wonder what's the plan moving forward for Moon Inc. Is there any, like, are you expanding into any more potential partnerships? Basically, what's the roadmap from here?
Yeah. So really, the brains behind this major operation are the Sora Venture founder Jason Fong and the UTXO guys, which are David Bailey and Tyler Evans and Coin Mateer. So they have a larger plan. Now for UTXO, it's a global plan. For Jason, he's very much focused on the APAC, the APAC time zone. And so there is a plan to roll out more treasury companies across Asia. We have potential launches coming in the next few quarters in Taiwan, in Vietnam. We're looking at opportunities in Malaysia, Indonesia, potentially even more opportunity in Japan. And the idea really is to create a network of companies out here that can leverage each other in terms of just best practice, knowledge sharing, and process. And I think one extra point is that Moon Inc. itself is really intended to be the hub of this APAC expansion. For one, we are at the heart of sort of, the China story, the greater China story. And for two, we have already also taken minority stakes in companies like DV8 in Thailand and also in BitPlanet. So we have a vested interest in these partners of ours for them to succeed. And that is also a way for Moon Inc. to really expand its portfolio and ultimately its capital base and market cap is by having these stakes in partner companies. And so as they are able to raise Bitcoin, we are, effectively accreting value from that. We have a Bitcoin per share valuation based on the number of shares we own in their companies. And every market will be different. So, Hong Kong has its own rules and regulations that we have to really work with. And Thailand, for example, is a much easier place to operate in. In Korea, we have a very different set of rules that are probably a bit more restrictive, but the company there has a much larger treasury to start with. And so every opportunity that we're looking at across Asia will feed into a much larger strategy that I think will ultimately benefit, all of our companies.
Yes, that's great value being added there, and especially comparing all these different markets, whether it's in Hong Kong or Korea or Thailand, as you mentioned. Well, but I'm afraid we have to wrap here. So, what's the key takeaway? I want to have the key takeaway for viewers to from this interview. So, uh, for people skeptical about Bitcoin treasury companies, basically, what are the advantages that make the strategy suitable for Moon Inc. and suitable for the long term?
So Moon is in a very fortunate position. We've been effectively green lighted by the Hong Kong Exchange to include Bitcoin product into our product suite. We have launched already our prepaid Bitcoin cards. This is in a partnership with Ballet. And we have made our first wholesale sale or transaction here in Hong Kong. We have MOUs from other potential buyers for wholesale, and we will be rolling those out to retail as well. We have other plans for other products as well that I think will add very nicely to not just the Hong Kong market, but we'll be leveraging our partners throughout Asia to distribute these products. So we're in a very unique position in Hong Kong, which I think still is in a regulatory gray zone. As things evolve, it should get much better, but we've already got, I think, quite a good advantage in that we've been approved by the exchange to work in this space and to accumulate Bitcoin on our treasury as well. I would also watch this space closely for these additional investments in Asia, both BitPlanet and DV8, and the further announcements that we'll be making in the next couple of quarters for other listcos in the region.
That's great. So that's all from our discussion with Ross Jacobson, the CEO of Moon Inc., offering a clear look at how the company is merging telecom infrastructure with Bitcoin-driven innovation. As Moon Inc. expands across Asia and deepens its Bitcoin strategy, is positioning itself as a notable player to watch. So, Ross, thank you so much for joining us today.
Thank you. Great to be here.